Welcome to Fintech Fridays.
Oh yeah!
A weekly podcast brought to you by the National Crowdfunding and Fintech Association of Canada and partners. Covering all things fintech, blockchain, P2P, AI, and alternative finance.
Hello everybody, Craig Asano, founder, CEO of NCFA Canada, welcoming you to a very special episode 57 of Fintech Fridays. It's a regular podcast brought to you by NCFA and partners, where we sit down with the amazing experts, leaders, CEOs, and founders in the fintech and funding community and talk about literally everything under the sun. Today, there's a certain degree of celebration around innovating in the space, around the topic of 10 years of investment crowdfunding. We'll say it again, a decade of investment crowdfunding. Today, we're going to talk about the past, the present, and future since the Jobs Act was enacted in the United States. We have an absolutely amazing group of OGs in the equity crowdfunding, securities-based crowdfunding, investment crowdfunding, you name it. The terminology has been evolving, but the people and experts are the same. They're coming together to reminisce and celebrate 10 years of the Jobs Act, which was introduced in the United States in 2012, and it stands for Jumpstart, our Business Startups Act. And it really signaled a turning point on opening up capital markets with sweeping regulatory changes, a lot of promises, new financial instruments for dealer brokers to raise capital for early stage ventures, startups, and SMEs, and also the idea of democratizing access to capital for a wide range of investors who could lend, invest equity capital into the ventures they love. So 10 years is an incredibly long time. So let's dig in. First thing I'd like to do is introduce our panelists or our guests today. We have a Canadian contingent and a U.S. contingent. So I'll kick off with our U.S. colleagues, in fact. Let me get this here. I'm going to start with Andrew Dix. He is the founder and CEO of Crowdfund Insider, also known as Crowded Media Group. Of course, it's a leading news and information website covering all things in not just the securities-based crowdfunding industry, but digital finance, peer-to-peer, marketplace lending. They also talk about rewards. They really cover all things fintech. So if you're not a subscriber to the newsletter, check it out. It's incredible. Plus, Andrew Dix is an amazing guy. I want to thank him personally for participating, supporting, getting involved. And really, together, we've been trying to connect North America in many different ways. So love that to continue. And thanks for joining us today, Andrew. Next, we have Sherwood, Neiss, Mr. Woodie. That's another story, perhaps, Woodie. I never ever got the story about why they call you Woodie, but he is the principal at Crowdfund Capital Advisors and partner at Crowd Capital Ventures. He's a serial entrepreneur. He's an investor, and he was instrumental in helping the Jobs Act get passed. He's created the first database that aggregates online investment offerings under the Jobs Act, provides a ton of research analysis in the securities-based industry that is used by policymakers, the SEC, and everyone worldwide. And he really has a heart and a bent for supporting local economies right across the United States. So welcome, Woodie, or Sherwood Neiss. And next, finally, from our U.S. contingent, we have Kim Wills. We're delighted that the founder and CEO of CrowdBureau Corp. Kim is a securities-based crowdfunding, peer-to-peer, and online lending and digital banking pioneer. I certainly won't stop there. There's a lot of things to talk about, Kim. I certainly can't get them all in. She's corporate governance, risk management, banking regulation, author, adjunct professor, a business owner that led to 2017 launching as the founder and CEO of CrowdBureau Corporation that provides rule-based stock indices for financial products such as ETFs and managed account platforms, also providing research analysis and risk management for the peer-to-peer and digital banking industry. She has been quoted over 100 times on the Jobs Act, so a real expert and guru, and thank her for being here today. Thanks, Kim. And let's move on to our Canadian contingent. I always say when Alixe is joining us, we don't need to introduce Alixe. She's been a long-time advisor. She's an amazing securities lawyer. She really feels passionately about helping small businesses and receives our highest endorsement. So if anyone is interested in the laundry list of legal services, you've got to get in contact with Alixe. I mean, we're talking M&A, dealer registrations, private placements, financial transactions, reverse mergers, IPOs, blah, blah, blah. You get it. Alixe is the one to go to. Peter Paul, up next. So sorry, Alex, I always kind of say the same thing for you, but we have had an amazing journey in 10 years, which brings us together. So thank you and welcome. Peter Paul Van Hoeken. Peter, where are you? There you go. Give us your hand there. Founder and CEO of Tokenfunder. I met Peter Paul many years ago at one of the NCFA conferences, even pre-launching Tokenfunder, and it's been incredible to see his journey. I think you launched that business in 2013. It's now Canada's leading online funding and investment platform in the private capital market space. You've been dealing with a number of companies over the years, working with regulators coast to coast, always have new plans in the works. You're a busy guy. Thanks for joining us. Last, we have Alan Wunsche at Tokenfunder. He's the CEO and Chief Token Officer. So we're going to be talking about some blockchain things today. Alan got his start as a software engineer. He was a scientist and then identified early on that Ethereum was a game changer. And he envisioned a decentralized future powered by blockchain. And so through his life's work, he's implemented numerous enterprise tech-driven solutions and transformations. He was a capital markets and credit risk systems executive at a global bank. He's the founder now of Tokenfunder, and there are a number of firsts I wanted to call out that I had discovered. Tokenfunder, as a starter, is a Canadian leader in exempt market digital securities investing and trading, and he's currently very busy building that adventure. He launched Canada's first regulatory compliant security token on the Ethereum public blockchain chain, the first security token as an exempt market dealer, and the first secondary market security token trading platform called Freedom X for the private markets. It's a mouthful. I think it's suffice to say we have a stellar cast. There is no question in the securities-based crowdfunding world that this group cannot answer. So we're going to have a past, present, and future approach for the next 45 minutes, maybe 60 minutes or so. So let's get started on the first part. Let's just dig into the past. So we're going to do roundtables because there's so many speakers and try to keep it as casual and yet informative and storytelling as we can here at Group. So first question is around, for many listeners, what is the Jobs Act? What was it meant to be created for? What was the impetus? What was the purpose? And what did it mean to you? That's what I think is the kicker. Because, I had my own discovery moment with the Jobs Act. And, that was at a time when NCFA was forming. And this takes us back to that decade. I think it was in the summer of 2012. I'd like to start this one off maybe with someone like Sherwood Neiss, because he was instrumental in we saw this from our Canadian, grounds, what was going on. We were following it. Take us through those days, the Jobs Act and what it meant to you and your involvement.
Well, great to be here, by the way. Thank you, Craig. So, there were all these provisions of the Jobs Act that were working independently through Congress at the same time. We were very much involved in the investment crowdfunding one. We wrote the framework for it. We went to the SEC and presented to them as entrepreneurs that were frustrated with having to raise money only from accredited investors and didn't understand why these laws that were 80 years old governed the way we raise capital today. We literally sat down with a blank piece of paper and said, listen, if we've raised $1 million under these current exemptions, what if we crafted one that sort of blends in Kiva, Kickstarter, Indiegogo with securities-based, capital formation? 8-point framework, brought it to the SEC. They told us to go to Congress. Naively enough, we just walked over to Congress, started walking up and down the halls of Congress, speaking to people on both sides. The White House heard us testifying at the first House panel hearing. They got engaged. They had a contact there that worked side by side with us. President Obama, Democrat, Patrick McHenry sort of took the lead in the House, Republican, and this was probably the last bipartisan piece of legislation to go through Congress since it happened. But it was, we were very focused on, startups, IPO startups, SMEs, and how to get capital to them. The other provisions itself, we became very familiar with literally when we were at the White House for the bill signing ceremony, because we saw all of them come together. We actually saw that in the Senate when they pulled it together for the Jobs Act. But we showed up with, how do we create jobs? How do we, spur innovation in America? And, I think we've accomplished that. And I'm pretty sure we're going to talk about it in a little bit, but I won't spill the beans on that. But the data says yes.
Absolutely. Yeah, those were exciting days. I remember them fondly from a distance. This is certainly pre-COVID, a decade ago, right? So let's jump over to some perspective with you, Kim. You next.
Yeah, so following up to what Woodie was saying, I mean, I know him by Woodie, not really Sherwood. I don't like that name so much, but Woodie I love.
I love both names.
And so really after that framework was created that Woodie's talking about, we had to take that, what I think was a 17 or 18 page framework at the signing, and we had to take those frameworks and really create the bodies of work to allow the industry to get moving and to employ that capital to the small and medium-sized enterprises. And so from 2012 up through 2016, the Jobs Act has 7 different titles, but 3 of those titles, we needed to put some rules in place that would give us some proposed rules, and then take that to the public for comments. And then we then had final rules that came out for each titles 2, 3, and 4. And so when you talk about my being cited 100 times, it wasn't cited necessarily in the Wall Street Journal or New York Times. So I was cited in those as well. It was in the final body of work that came out. And so in terms of titles 3 and titles 4, my work was cited over 100 times in terms of giving recommendations on how the marketplace was going to operate. And so with that said, a big part of this is not only just getting capital in the hands of the entrepreneur, it was around creating another asset class in terms of regulatory crowdfunding. It was about providing a gateway to the IPO ramp on. So that's Title 1 of the Jobs Act. And then the other piece to this was ensuring that the retail market, retail investors could actually take part in investing in early stage ventures. And so that was the piece, in terms of not just taking money from the accredited investor, but accepting money from the non-accredited investor without a pre-existing relationship with them, is what really made the Jobs Act something really powerful and influential. And I'm sure we'll talk a lot more about that as we engage in this conversation.
That's so exciting. I mean, the potential of a brand new asset class, the jobs, the new opportunities, everything, all the excitement and buzz that happens when something new and shiny hits the market. I remember those days, the media was ringing off the phone and people were super excited. So let's go over to you, Mr. Dix. That was right around the time you were setting up Crowdfund Insider. You had this vision, you saw this activity. Jobs Act for you.
Yeah, well, I'm glad that we heard from Kim and Woodie first, because they were there before day one. I mean, you talk about, OGs, they're like, right there before the beginning. So it's great that the two of you can participate in this. For me, when I first heard about it, I was like, what? That's not legal? Why can't you raise money online? It doesn't make sense. And so it was kind of a, the light bulb went on. Well, now this is going to be legal. So what does this mean? But I think for like most people, you see that there's a bill that becomes law and you think, okay, well, tomorrow we can start using it. That didn't happen. It actually took quite some time to get through everything, as Kim alluded to. And in regards to Title III or regulation crowdfunding or RegCF, the one that I think that gets the most interest from people, it wasn't until 2016 that we actually had final rules that could become actionable. So I wanted to click my fingers and say, go, let's get this done. And it didn't happen like that. And I think there was a lot of frustration within the industry, within the platforms that were aiming to leverage the new regulations. But once it did set into place, then you really started to see something new, different, and exciting. And I think it's something that is obviously ongoing today. And it's also something that we're still at the very beginning of. And I know you guys have been here forever, and it seems like, decades have been, fighting for this, but it's really at the very beginning of online capital formation, securities crowdfunding, whatever you want to call it.
It takes a long time. If there's one lesson I've learned over the years, affecting change and the number of meetings and the work effort involved, it's monstrous. And they open up large volumes from the past, and there's a lot there. They need to unpack it. And then just the effort to balance the value proposition for all the stakeholders, it's enormous. And to see it happening again as the industry evolves, but that's further down in the podcast. So that provides some great background for the excitement back in 2012 around the Jobs Act. Let's jump north of the Canadian border here. And I think we're going to start with you, Peter Paul, because you have been involved since the Jobs Act from a long time ago. What were your thoughts from a Canadian perspective, and a little bit about our road to creating Canadian regs?
Right. So, yeah, and also great to be here on this in this discussion. I indeed I remember the early days. Actually, this was after a couple of years that I have been in Canada and originally moved over from the Netherlands, and sort of after a couple of years got a lay of the land of the securities landscape, and also figured out fairly quickly that in Canada that we actually blessed with 13 securities regulators, which is which puts an interesting dimension to obviously also innovating, particularly in the regulatory space. And so yeah, I remember the days where, of course, the Jobs Act was introduced and followed with interest here north of the border, and we obviously wanted something similar here, and for all the same reasons as Kim also mentioned about opening it up, access to retail investors and all that, and it's been it's been definitely a bumpy road, and that really comes down to the fact that, of course, the regulators in Canada wanted to also sort of facilitate this, looked closely what was happening in the US. And so rules came through in actually the first crowdfunding rules in 2000, that was in 2015. And of course, the challenge was that those rules were fragmented because of the fact that we have different, multiple regulators in Canada. So although we could start in 2015 with experimenting with crowdfunding, it is actually only since now September of last year, and we talk about it a bit later, but September last year, 2021, that we have harmonized crowdfunding rules in Canada from coast to coast. So that's how new it is really here. But in the meantime, of course, and that's how I looked at it from founding Crowdfunder and launching it, is to use what was already available. And of course, we have different exemptions, like the accredited investor exemption. We're gonna go beyond that, which we could do with an exemption like the offering memorandum, but of course also with the new crowdfunding rules. So yeah, I remember the early days, and also the engagement with the regulators, who obviously also really in the dark on if and how should we allow this. And so also here in Canada, we've definitely come a long way, and I would totally agree with what Andrew was saying, is that I feel like we're sort of perhaps at the end of the beginning, and we're really there's much more to come. But of course, I also often say, like, if you want to see where the puck is going, and we don't necessarily look within Canada, but also in other geographies like the UK, where it's also started, I would say, perhaps fair to say, sort of really one of the first countries, and the US, of course, with following the Jobs Act, called up very quickly. But we see where it's going, and we see how it's sort of really advanced there. So that is really exciting, and that's what certainly kept me and going, and knowing that this is where it's going, and we see that it's happening right now.
I love the hockey references. I don't know if you saw my cup, but where is it with hockey dad? Anyway, those were the days. There were numerous calls with a variety of provincial regulators trying to educate. We had several trips to Ottawa. We brought in for a variety of presentations, questions, but things were just not moving as fast as industry would like, which seems to be the common sort of sensibilities around it. But Alixe, what was it like from your perspective? I mean, just the road to creating the regs, what happened, all of that.
Okay, so Craig at one of the conferences said, I heard you cried on stage talking about crowdfunding. He goes, it made my day to hear that. So I'm known as a crier about access to capital for small and other issuers. I've been trying to change regulation prior to equity crowdfunding. You know, part of it is, as Paul alluded to, we have the offering memorandum exemption in Canada. And when it was initially introduced, it didn't require audited financial statements, believe it or not, if a company was a certain stage in their business and they didn't have them. So if it was a newly formed company less than 2 years old, no audited financial statements were required. It didn't have any caps in terms of how much you could raise. And small companies didn't use it because they didn't really know that it existed, because no one was doing that outreach to smaller companies that weren't located in Vancouver, Montreal, and Toronto. And it's always been one of my beefs of mine. They changed the offering memorandum when they started kind of introducing it into other provinces. Ontario didn't have that exemption until about 2-3 years ago. But when they did make the changes, that was around 2000, maybe 1998, 2000. That's how old I am in this. But they required audited financial statements. And I submitted a letter saying, if you put audited financial statements in, you automatically make it something that smaller companies aren't going to use. One, they use, at the time we were still using Canadian GAAP for public companies, but we shortly switched over to IFRS. But most small companies don't get audited financial statements, and said it really didn't make sense for early stage companies to do that. They did it anyway. And I said, the only parties that are going to use it are funds and real estate. And that's exactly what's happened. And the regulators seem to be surprised by that. Anyway, so, we've been advocating for other kind of changes in rules, and crowdfunding was something that I got on quite early. So I also was one of the only lawyers that had done 6 Regulation A offerings before the changes to Regulation A. And so the SEC reached out, and a couple of other people reached out and said, what can we do with that? And, I think almost all of the securities lawyers that they canvassed all said, raise the amount. But, Regulation A really doesn't address those small and micro cap companies that really I want to have access to capital. So I participated with the SEC forums and flew down there to participate in person, talked to as many people as I could. And they also participated on the state side. So the SEC side was moving too slow for me, and it was moving too slow in Canada. And I think the correct approach that your group, Woodie, took was going to the legislatures rather than trying to do it with the securities regulators themselves. And so pushing down, it seemed that really worked. And so I started kind of working with a couple of different groups and talking about state equity crowdfunding and trying to affect the change that way, and talking to NASA about equity crowdfunding, because they were adamantly against it. And I think Chair White at the time, who was the chair of the SEC, was adamantly against equity crowdfunding. She thought that that would undo her legacy of investment protection. And that's in part why it kind of dragged on so long. And 506C has not been useful. 506C allows for accredited investors to, for you to scream out as a company to look for those people and do advertising. But because of the rules that were put around there for investor protection, that rule really has not taken off in the US. And we can talk about later about kind of Jobs Act 4, I guess they're calling, or 2022, and what that may hold. But yeah, so here in Canada, Saskatchewan was the first party that brought it in. So the Jobs Act really started Canadian securities regulators thinking about, should we do something too? And people like myself, Craig, some other people that are no longer Brian Kosak, I would say, started kind of talking to securities regulators saying that we need something like this too. So Saskatchewan adopted the first equity crowdfunding in December 6th of 2013. And leave it to like a prairie province that's very kind of, looking and saying our investors and companies aren't getting the love. Let's try this out. They were on their own. All the other provinces were adamantly against it. And it was March 2014 that it ended up being adopted, the startup crowdfunding exemption, by 6 of the provinces. But it was really, really, really curtailed by kind of the market cap that, or the amount of capital that people could raise. It was $300,000, 2 financings of $150 each, limits of $1,500 per investors. It wasn't very useful. And I think we're going to talk a little bit later about how it's kind of evolved. Ontario also introduced one that they wanted to put forward, and their version of equity crowdfunding had a larger cap, looked more like the US version, but also had, the requirements of audited financial statements and continuing audited financial statements for the life of the company, which made it prohibitive for small companies to use. And they were surprised, and I don't think they were surprised, that it wasn't being used and still hasn't been used, because it just does not fit for the type of companies that it was aimed at. So anyway, and yes, I still cry when I think about equity crowdfunding, and I get pissed off, and I try not to yell and scream. I'm not a yeller and screamer, but I think there are effective ways that I think we can move the needle even a little bit further.
I remember that first news that came out of Saskatchewan. I was in the city, downtown Toronto somewhere. I saw it on my phone. I think that was eye-watering for me even, and we were texting everybody, getting super excited, and there were like 10 people interested in it. That's how early it was, it would seem, and there's obviously a lot of changes that have happened since then. But Mr. Wunsche, Alan, Tokenfunder, I remember we met in 2016. You came down to the NCFA office. And you dropped the word crypto or blockchain or tokens, and it was kind of mind blowing. Everybody when they first hear is trying to wrap their head around it. Blockchain finance. Did the Jobs Act resonate with you, or you had to go back digging into that, or what are your thoughts on it?
Wow, and thank you for having me as well. Having lived through, as you said, through 2016 to today, I certainly have benefited from and appreciate all the work that you have done, and Alixe and Peter Paul and those in the Canadian space. Hugely important for the industry. We took some unprecedented or that's sometimes considered naive steps in trying to apply what was available and apply it in a new format, and our objective was to ultimately allow for these crowdfunding and investment opportunities to be made available through this new format of blockchain and creating digital securities and such. So we ended up having another set of challenges, frankly, and Peter Paul's absolutely right in that having so many provincial regulators was something that frankly took me by surprise. And coming into the industry, not realizing that it was that fragmented, and that everybody needed to opine on your business model, and every jurisdiction needed to review every screen of your platform and every method of your transaction. It was daunting, and so it took a long time for us to achieve what we wanted to achieve. And I say a long time, I mean, whereas we thought this was going to be a quick path, it would have taken us. There's a lot of stuff that happened behind the scenes, so not getting into that, but a good solid year just to get the understanding of blockchain within the whole regulatory community and comfort level with what could digital securities do, and how could we employ potentially cryptocurrencies, which, by the way, is a challenge still today, and that's not a regulatory securities regulatory issue. It's more of a banking issue. So the two end up meeting in a model that we try to bring forward, and that's leveraging new forms of payment and new forms of investment as digital assets. And that was these are all big challenges. So we've got a significant amount of scars as we went through the whole education process around implementing blockchain. And then how could we potentially make these new, typically illiquid securities more liquid? And therein lies a whole, several years worth of work, which has been, frankly, again, I'd say having come into the space as an entrepreneur, on the one hand, I mean, I've been involved in many startups, but I also came from the regulatory space just before blockchain, and as you said, one of the biggest banks. So I was very familiar with regulatory processes, but I was way too optimistic in terms of how quickly we can move the needle. So an incredible amount of, I'd say, education was required, and then, you know, finding legal support and legal counsel that actually understood the kind of model that we were proposing was another challenge altogether. We're not there yet. We're still moving forward. You know, with constant education. There's new technologies. There's decentralized finance technologies that we should be taking advantage of. But our new frontiers for our regulators today, and so I kind of moved into where we are today. Sorry, Craig.
You're killing it.
We have, as the others have said, you know, there's just been a road and a journey that we've all decided to climb, and you know, we took one and we benefited from the work of everyone else here on the panel, and yet we found that we ran into a new set of obstacles. Including, you know, banking regulations that ultimately impacted our ability to accept cryptocurrency, which we don't today, but we do create the digital securities. So how do we make them tradable? Now we're working with, okay, so applying the offering memorandum exemptions in a new format. That's kind of where we begin. And we still, as of today, we're in discussions with how we're going to, frankly, expand what I'd say is their comfort level with where we stand on investor protections, quote unquote. Because I'd say one other thing I will say is that our journey through this and our learning is as Alixe I think is alluded to very well, is that even law firms and companies that we've worked with have kind of been scared off by the whole offering memorandum exemption process. So, you know, having that as a headwind has been challenging, and then you're and then of course, as I say, trying to come into, you know, bringing a new technology forward, we end up with ultimately trying to kind of unwrap or more deeply kind of dive into what exactly are investor protections as a principle versus a rule. And, you know, our principles are very clear. Now, our rules need some change, and our rules can change, and we can apply some new technologies, which we do, and we propose today to embed investor protections in a unique and novel way, but they take time. So they take time for the individual jurisdictions, and as we happen to be in Ontario first, we start there, but then we have to go around, you know, the country and getting blessed at pretty much every level, and that's a challenge today.
I feel your pain. I do feel your pain. We've all been there in varying capacities, but that was 10 years ago. I mean, collectively, we have over 100 years, I think, if you add each one of these Zoom boxes up, of like, let's not forget the purpose, raising capital, providing opportunities, like Woodie, I'm going to throw it back to you. When you were setting up the database and tracking those offerings, doing all that outreach, partnering with all the DBs, the dealer broker platforms and everything, how big do you think the regulators thought that this would be? Did they think this would be a huge ocean, or did they always envision a little pond? And maybe we can propel that a little bit into the present today. Some of the, what you've been seeing, types of companies, the impact. Let's get into some of that.
That's a really good point. Entrepreneurs, highly optimistic, doers, we can achieve anything. At the White House bill signing ceremony, I was approached by one of the regulators from NASA, and he said, "I hope you're prepared to be sued for everything that you have." And I was sort of confused, and I was like, well, I guess he's going to think it's going to be bigger than I thought. And then the woman who helped champion this through Congress with us, because, you know, we don't have the connections. She did, Karen Kerrigan of the Small Business and Entrepreneurship Council. You know, we were leaving the White House, and she said, you know, guys, don't expect this to hit for 7 years. She goes, I equate this to like medical savings accounts. You know, they passed Congress, it took some work, nobody knew about it for 5 years. Then you had, like, you know, in the 4th year, starting to get some traction, 4th through 6 years, and then it started to take off. She goes, you're probably going to see the same thing. And interestingly enough, that really is what the data shows. I mean, I think this is a little more, it's picking up a little faster. In May of 2019, I really started to see traction pick up among investors. The dollars started picking up in earnest after that. You know, there's been over 5,300 offerings by well over 4,000 companies. There's been multiple offerings by companies. There's been 1.4 million investors. This past October, we hit $1 billion. I thought that was a threshold that would really engage financial services firms, the media covering this. You know, we've yet to see that sort of traction pick up. You know, this year alone, I think we'll do another $1 billion. Last year, there were about 1,500 offerings. This year, I think we'll probably do 2,500 alone in the United States. The thing that I've been really most impressed with, though, is the number of industries represented. I mean, you know, when we were lobbying for this and we were talking to people in Congress, we were like, well, you know, pre-IPO startups can create a lot of jobs. On the other hand, you've got these retail businesses that have been crushed during the recession. How can we get capital to them so that they can keep local economies going? So, you know, our brains are sort of on both ends of that spectrum. But, you know, this crystal ball that I look at every day of all of these offerings taking place, you know, we've got what, 512 NAICS codes. Those are the industry codes for all industries in the United States. I guess it could be global as well. And there's over 90% of issuers that have been successful in all of those industry codes. So, you know, from solar panel to, you know, electric vehicles to beauty supply. I mean, you know, crypto, hot sector, you know, you've got platforms that are forming, you know, core competencies in each of these. I think it blows my mind personally, you know, of what's going on. I think that we're in this, you know, I'm in this information overload phase, I'll tell you that much, where there's just so much going on. The opportunity is mind blowing. But, you know, I personally think I'm seeing these unicorns that are just percolating right in front of my eyes. Well,
$1 billion, like applause for that. And that is certainly a milestone. But, you know, the regulatory changes that have happened since 10 years ago, I mean, you know, Andrew, did you want to touch upon that? I mean, jumping from $1 million and then, you know, the accounting up to $1 million, you know, $1.5 million and now $5 million. I mean, we have been advocating at NCFA for a $5 million threshold to be internationally competitive for years. And as Peter Paul was alluding to, we just got harmonized crowdfunding. So, Mr. Dix, what do you think about the market opportunity size? Like, are we going to have, like 10 years ago, how many platforms did we see in that initial flurry of interest, and how many platforms we got today, and how big is the market capacity?
Well, I think that's kind of an unknown as we define that right now. But you asked a couple questions. First of all, I think the changes that were made last year by the Securities Exchange Commission, most importantly, RegCF bumping up to 5 million, Reg A plus to 75 million. Those are material improvements. There were some other things that were added there that were helpful as well. And I think, you know, simply taking a 1.07 million funding cap and moving it up to 5 million was huge, because a seed round today is millions of dollars for a promising young firm, and it really made a lot more sense. And so that was a big win for the industry. We saw an issuer raise $5 million the same day it became actionable. I think for the industry, that's awesome and amazing. It's going to help fuel and boost things. I think that as we've mentioned before, we're still early days. this is going to be an enormous industry, but I don't think we're going to be talking about it like as securities crowdfunding or investment crowdfunding. It's going to be more like digital investment banking. Digital securities are the future, and it's just hard for us to kind of get our thoughts around that. And the digitization of finance is going to create more opportunity over the coming decade than we can really understand right now. I also believe that to really scale, and when I say scale, I'm talking about for platforms and for the ecosystem, you're going to have to involve institutional money, and you're already seeing that, and it's coming. If we want a successful industry, and I think everybody does, you have three constituent, portions of this industry. You have the issuers. Issuers need to raise the money they need. They need to do it quickly too. The platforms need to be able to make a profit. Now, today we have platforms that are actually making a profit. It took years for that to happen. And you need investors to see a return on that investment. And early stage investing is risky. Most of these companies are going to fail. That's okay. It's called a market economy. It's called capitalism. We need to embrace that, because while we're funding these companies, we're creating jobs that are vitally important for the economy. We are training people with hands-on experience to learn innovation and entrepreneurship. This is what this country is about. This is where we need to go. We're just getting started. This is the future of capital markets. We're seeing it right now. It's just the beginning.
Where do I sign up? I love that pitch. I mean, we signed up 10 years ago. We're still Kim, I'm going to throw it back to you maybe from a regulatory perspective, or from all that experience, and you've seen us the cap, or from a U.S. perspective, and all those different title, 1, 2, 3, 4, all these different titles. Does the U.S. have everything they need to support this future that Andrew's talking about, the digital banking and the gaps that may exist? Just some thoughts there.
Yeah, so I want to double back just on a few things, and I will answer that question, and I'll put some context around it. So I think that we have a lot of things already in place to support the advancements of digital finance. With whether it's the old the Securities Acts of 33 and 34, and then what we did with the Jobs Act, which enhanced those securities rules. We have put in place a very strong ecosystem, I think, that can support the advancement of digital finance. That's number one. And everything is going to continue to evolve from that. I think the misnomer here is that because people are using crypto assets or tokenization or smart contracts, is that we have to go back to the drawing board and start all over again, and we don't. We've done a lot of work to advance small and medium-sized businesses or emerging growth companies an opportunity to actually raise capital, and we need to leverage those rules across all countries and then use the technology to facilitate those transactions to occur. But the rules are really in place. They just need to calibrate them a little bit, in my opinion. I think a few other things. Woodie, you may remember this. I mean, by the time we got to 2016 with the final rules, we had gone through 3 chair people at the SEC. We had Mary Shapiro when we first started in 2012. Then we had Elise Walter about 2014, 2015. Mm-hmm. And then we had Mary Jo White. Right. So it was education for each of them in terms of some of the adoption of where we were trying to go. That was the first thing. And you may also remember, which we didn't talk about, why Ontario had actually looked a lot like the US, is because Ontario came to us at the Crowdfunding Intermediary Regulatory Advocates and asked us to give them the framework to get the rules going in Ontario. So the OSC took those rules that we had created for the Jobs Act and applied them there in Canada. And they did the same thing also in Malaysia and the Green Paper at the European Union. They took the first framework from the US and applied those rules. So that's why some of these things look a little similar. So I wanted to address that because I heard all of your comments, but that's how all of that kind of came together. They leveraged all of the hard work we were doing to advance the other countries. In terms of where are we going, in terms of the sizing of the market and what needs to happen, you know, I look at crowdfunding, whether we're looking at Reg D 506, C, B, or C, or Reg crowdfunding, or, you know, Regulation A+. To me, this is Gen 1 of where we're going with digital finance. If we look at where we are today in 2022, we're at Gen 2, okay? Generation 2 in terms of taking the technology and facilitating the transactions. And so a big part of this is, and I know this is part of some of your questions, so what were some of the challenges when we first started the industry? Well, the crowdfunding platforms, they really couldn't do crowdfunding. They had to serve really as marketing platforms and work with broker dealers to facilitate the transactions on the back end. And so when you look at some of the leading platforms today that are doing RegCF or Reg A+, they started out as marketing platforms, whether that was Seed Invest, or whether that was WeFunder. They couldn't do RegCF because it wasn't legal, okay? Now they're doing that. What I see happening going forward is the evolution of blockchain will most likely replace some of the technologies that they're using, and the way in which companies are raising capital, whether, you know, 2017 was the ICO, which didn't go very far. If we all know what we're doing now, a lot of companies are raising their money using IDOs. Different terminology, but it's still quite similar to what just traditional raising capital is, except they've adopted tokenization, they're using a launch pad and so forth. So I think this is the evolution of where things are going.
Yeah, it's fascinating to hear the sort of the evolution of the technology versus the platform, but it's explosive, and from the regulatory perspective, it's very sequential, and just to hear having to go back and unpack, but there are learnings, and hopefully, you know, I think the market has more data than ever before, not necessarily true in Canada, and to the extent that regulators share that for being as transparent, so innovation can spawn from that is, I think, another challenge. But thanks for that. Okay, yeah, go ahead.
Can I just add one more thing? I think the other thing, just in terms of data, we always talk about the equity side of this, but there is a debt side. And when we look at the debt side, you know, peer-to-peer transactions, whether it is in payments or whether it's in lending, the idea was that securities-based crowdfunding would allow for both equity and debt. And so if I look at the numbers in terms of, from a global perspective on peer-to-peer lending, okay, which are still using platforms, you know, it was over a $200 billion industry in terms of the loan sizes, you know, that came across, and that's from Asia, Europe, and North America. So the industry is much larger than, you know, just looking at it through the lens of what was raised on the equity crowdfunding platforms for, say, RegCF. And I think that's part of how we need to kind of look at this, like the terminology is changing, but we're all still talking about the same thing. And I think if we put it all together, we would say, wow, this is a much larger industry from 2012 when the regs got signed up through where we are today.
Yeah, absolutely. I believe there's a Bowhurst report out of the UK that tracks the ECF venture offerings or financings, and it's now representing approximately 30% of all those startup raises. So there's hope, but it's a large pie, and every jurisdiction has its own unique challenges here. But Alex, before I get to you, I just want to get Peter Paul's thoughts on sort of the platform changes that have evolved, because, you know, remember, there's a whole rewards-based that came out initially. The Kickstarter had the tabs, the documents, and there wasn't a whole lot of tech there. It was a marketing thing that, like Kim's talking about. But from your securities-based perspective, what have you been experiencing, and are there learnings that have to go out to regulators, or is it another type of limitation from your perspective?
Yeah, it's interesting actually what Kim was saying about this terminology we're using, because I remember as we went through this journey of, ECF, equity crowdfunding, and then of course, you position it as opposed to traditional crowdfunding like the Kickstarter, Indiegogo, rewards-based, pre-purchase, all that, and actually we were at the point where say, we basically need to get rid of that word equity crowdfunding altogether and call it something differently, because it was in a way was sort of struggling like what is it, and also positioning it differently to, again, the traditional ways. Well, at the end of the day, it's really, of course, investing in companies. Anyway, going through that, well, probably to better stick to equity crowdfunding, because that still seems to sort of resonate the best of what we're trying to achieve here. But to Kim's point, it is indeed way beyond equity, of course. And if we look at when we sort of do our market sizing here in Canada and the potential addressable market, we sort of look into private markets in general. We take out all those, let's say, private placements that is typically only institutional, that will never, between institutional parties even, and then what's left is potentially addressable for, let's say, investment crowdfunding, which could indeed be equity, but it could also be debt. We could be, it could be also all sorts of product convertible notes, partnership units, anything. And we actually on our platform have also seen those different, kind of products, come by. So I think that ties into the point that Andrew was made about, like this is obviously, this is the digitization of finance. This is the democratization of capital markets in general. And of course, we've seen that happening in the public markets, where I believe now about 20% of capital going around in the public markets is actually from retail investors, through the online trading platforms and all of that. And so the retail investor are already there and well and present in the public markets. And I think the next big thing is really that now they're going, come to the private markets, and that becomes accessible to them as well. And that's ultimately where investment crowdfunding is going. I wouldn't be surprised that, in the 5 years forward, that we may hear less about crowdfunding necessarily, but more about the democratization of capital markets, which includes the private market as well. So which includes also investing in startups, scale-ups, and growth companies. And on that note, what we've seen, and we've operated to the comment about being a marketing platform only, that's always been a struggle here in Canada as well. Like, how can you basically execute here as a platform, but be more than just a sort of back-end processing solution? So with Crowdfund, we work with the regulators to get registered as a so-called exempt market dealer, sort of equivalent to a broker dealer, a bit a lighter version, I would say, which enables us also actually to actively market and promote as well. So we have been able to help companies, broadcast their capital raises and actively on the marketing side as well, but also be responsible for the actual trades at the back end. So I think that's really we've come a long way. Also here the comment about that Woodie made about only the last couple of years we've seen it really take off, and you're absolutely right. We've seen it in the UK, where we early on said that's where perhaps it sort of started the earliest, where you also see 8 years in, 7-8 years in, it started really exponential growth, and I feel like that's where we are here in Canada, and certainly we already see it happen, of course, in the US, which is really really exciting to see. And final comment, the rules here, we are of course still, we're happy with harmonized crowdfunding rules since September last year. We have a limit of 1.5 million Canadian dollars, which is a great progress coming from $250,000 per raise twice a year, so let's say $500,000. We obviously want to go up as well. We want to get to the $5 million US that regulation crowdfunding is at, but we definitely see certainly as we sort of where we see the market right now, and sort of this funding gap anywhere between $500,000 Canadian dollars to $2 million. That's typically where you see companies struggle. Where do you go? It's too big for family, friends, angels, not enough, VCs too early. So we see a lot of companies in that segment raising with us, but again, moving forward, and I think that as the market gets more comfortable and the regulators as well, we obviously want that 1.5 limit to go up as well.
That's amazing. This conversation has got to go beyond what we budgeted for. If people are up for it, we're just going to continue rolling it a little bit longer. Got lots of things to cover here. Alixe, I totally understand if you have to drop off. But Alex, can you, before we just let go of the past, because there's a convergence of so many components here, and some with your experience and background in, the North American context, but from a Canadian perspective, and with your North American experience, what lessons or insights are there from a regulatory perspective, and any other thoughts from, whether it's in the investment side, the buy or sell side? I'm just trying to get broader questions to groups so we can get these points across and discuss them.
That's some of my regrets. Like, Kim, I appreciate the Ontario Securities Commission may have pulled it from somewhere else, but we already had the offering memorandum exemption, and they could have retooled that in a way to make it work for those other companies. Alberta and Saskatchewan, for instance, already had a carve out where they didn't require audited financial statements for the offering memorandum exemption in those two jurisdictions. Of course, they were more like kind of interstate. This was inter-province type exemptions, or between those two provinces. But really, I thought that Ontario set, and I'm going to just say it out there, and I know they're going to see this. They already know what I think. I think they set up crowdfunding to fail in Canada. I think Ontario didn't want it, had to put something out there, and they set it up to fail. So they know I believe that already. They actually do believe, the Ontario Securities Commission, that small issuers in Canada are awash with capital, that there's just money available for everybody, and it's because they're undeserving of that capital that they don't get it. I find that highly offensive. I've told them that. I still find it highly offensive. I just heard a securities regulator conference from Alberta, where again, that securities regulator said we've got too much capital and too many investors and just not enough good companies, and that's why capital's not getting to companies, is because they're just not good enough. It was kind of the underlying sentiment there, and again, I was quite offended by that. We need rules that work for entrepreneurs, and we need rules. My regret is not, like, I basically ghosted a letter for a couple of different organizations. I didn't put forward my own letter at the time against what Ontario was proposing because NCFA was in support of it. And so it was a consensus group letter, and that's how it went out. But I've always regretted that, of being silent at that point in time. So lessons I've learned that, sometimes going to the newspaper and shaming regulators is sometimes a good thing to do. Not maybe the best thing to do, but sometimes it works. Certainly, I think, for the SEC, some of the actions that they've taken, if you take a historical look, oftentimes it's when the legislature is going to do something that they end up, moving something forward. And I think that, that's good and bad. I think for the state legislatures, certainly it was the state legislatures that pushed on the state securities regulators, crowdfunding, because they didn't want it for the most of them. But having talked to a number of those state regulators, they were really supportive of crowdfunding after having it for 5 years, 6 years in place, because they saw the benefits to their communities and the type of companies that were being funded, and they were the type of companies that they wanted to be funded. And that's the feedback that I've received from several securities regulators who were quite surprised by that. Here in Canada, we've only got like a handful of portals. We've had a number of portals that kind of started out, but they got starved out. It's just taken too long to have a national crowdfunding exemption in Canada. And so right now we've got, I think, 6 that are registered, not including the exempt market dealers like Frontfunder and Equitizing and Tokenfunder, which are registered as exempt market dealers. And on the lending platform side, lending peer-to-peer here in Canada has been quite difficult. I think they've had a harder time than the equity platforms in terms of getting regulators to really understand what they're trying to do and accessing kind of the rules. They're really not kind of built for that. And so those platforms have really kind of struggled here in Canada. And down in the States, you have 74 funding platforms right now that are registered with FINRA. And, you have a competitive market, and I think you have a very kind of robust market. And certainly we would have liked to have seen, we know we're like, 1/10 of the size of the United States in terms of population, but, 1 billion of capital having been raised, I think we're not there. I don't think we've raised like 100 million under our crowdfunding rules. On the offering memorandum exemption, which is kind of like the Regulation A, or our accredited investor proportion, certainly more capital is raised with that. Offering memorandum exemption regularly raises, billions of dollars per year, multiple millions of dollars per year, because it's primarily used by funds and by real estate. And real estate projects, they'll raise as much as 100 million, 150 million easily under the offering memorandum. And so that's something that they regularly go to. I'm really kind of hopeful, switching over to Jobs Act 2, because I see kind of a lot of opportunity there. I would say that some of the things that are being proposed, like for Rule 506, they're proposing to get ready for self-certification. So that's been the holdback, I think, of 506C being used by platforms and also by issuers in the United States. And so that's one of the proposals there, that self-certification of your accredited investor status will be enough. And I'm hopeful for that. And the other is for both regulation crowdfunding and also for Regulation A and preempting state securities laws for secondary transactions, which I think people in the industry have wanted for quite some time. The private placement and private finders exemption, it's up again. We had something in the legislature in 2018. I'm not sure, whether this bill will go far. I'm hopeful, but it sends a signal that at least people are listening. And I think here in Canada, I was really happy to see that we had, a national rule that came in place in September 21st of 2021, where now we had a national crowdfunding rule that was in every jurisdiction. What occurred here in Canada is we had different, basically territorial wars, where people would say, I'm not going to adopt your rules. I want this tweak and that tweak to it. And we're not going to do that at all, because we think investor protection is not being served by the startup crowdfunding exemption. And other people just kind of saying like, well, we're going to give it a try, but really no support by the regulators behind it. I think it's one of the reasons why some of the states have done really well with equity crowdfunding as well as peer-to-peer or debt crowdfunding, is their state regulators actually went out and talked to investors and companies about those exemptions and explaining and educating. There's a big, huge educational component. And I think everybody in this room has stuck with it, for the last 10, 15 years, however long we've been involved with trying to educate of just, everyone in the market, just how it works. And someone like Alan, you're having to teach a whole new language, both to regulators as well as to companies and issuers. And I think now pretty much everyone's mom, if your mom's still alive, has said, hey, I'm thinking about, learning more about blockchain, or what is this smart contract stuff? And should I be buying cryptocurrency, and which one should I buy? Certainly when I heard an aunt say that to me, who's like 67, I thought, holy crap, things have changed. Things have definitely changed. But, I'm hopeful, but at the same time, I oftentimes get crushed by regulators who just, it's pretty much kind of like scraping onto sandpaper to try to move up the ladder there and make change.
The gloves are off, Alex. I got to say that, but the reality is in defense or a perspective is that everybody in this call has so much experience. This is the front line experience. Regulators need to be open to hearing it, and there's a cost to being first. There's a cost to innovation, and we've all felt that. I think, Alan, you talked about scars. Well, we've all got them. We've all got them. But Alan, and I'm trying to, this is going on sort of past our budgeted time, but want to get into, I think we've done with the past. We're kind of in the present. We all see it happening. Let's get a little bit into the present and the future. So from your perspective, the regulatory rigmarole, for lack of a better word, you're still at it. What are you seeing? Are you seeing more acceptance? Are you seeing some growth opportunities? Is there any feedback or insights into your own challenges that the industry can benefit from discussing and advancing together with you?
Oh, that's such a long conversation.
In a short, I'm going to give you like a minute here, 2 minutes.
No, I'm just saying. I mean, I actually moved a call I had a few minutes ago. So, look, it is about digital finance, and I think, again, I think I'm very hopeful that what I'm seeing is a ramp up of of knowledge within the regulators. So I'm seeing it and I'm hearing it. You know, we've still got to push, because on the one hand, there are so many innovative things that we can do and we're prohibited from doing, and that's a whole nother conversation. And we're prohibited from doing so based on oftentimes, you know, just the fact that somebody says investor protections, and you know, you have to apply, you know, existing investor protections rules. And so we hear that daily, and you know, it's and oftentimes we think, you know, there's a lot of protection in place already, and you know, I think education is going to go a long way, and we continue to try to educate both the regulators and anyone else, you know, issuers that work with us. And I'll kind of stop right there. But I mean, I was always extremely hopeful, but I will say frankly, it's a monthly challenge, and you know, coming up across you know, more technology that we could be applying that doesn't see the light of day yet, because they're just not, I guess they're just not comfortable enough seeing it, because we could be applying some really advanced decentralized finance in a way that's very investor safe. But it's going to take time. So, you know, I used to think that it'd be fast. I was way overly optimistic in this journey, much too optimistic. So I'm trying to figure out, you know, what's the right level of optimism, because I think, you know, I have either a 0 or a 1. So I'm like, you know, way out here on the optimistic scale, but I'm constantly being asked about that. Anyway, those are just my thoughts. But you know, digital finance, absolutely. You know, liquidity for you know, typically illiquid assets and in liquid investments. So much more we can do there.
Craig, can I jump in and bash some regulators, please, for a second?
This is where the gloves are coming off.
Hey,
Yeah.
So look, part of the problem is that regulators tend to be a certain type of people. They tend to be lawyers and bureaucrats, and by nature, they're risk averse, and they are given a mission to regulate, and it's a straight line for them, and off they go. And Alex, you once told me that they show their scalps, but they don't do anything else. And you're absolutely right. Part of the problem is with the mission of most regulators, it's investor protection, it's efficient markets, maybe dabbled with a little bit of capital formation. Where we need to start is we need to add part of that mission to support innovation and competition in markets. And that needs to be there from the beginning. That needs to be their mission, and it is not. And so you're right, Alex, when you say that frequently the regulators will do something, we say, well, you know, Congress or whoever, they're going to create a law and get to it first. So let's jump to the head of the line there and fix things. That's not the way things should work. And frankly, the technology is here today to mitigate and manage many of these risks that have existed since the Securities Act of '33. And we need to be forward thinking. We need to be willing to shoulder some risk. We need to embrace innovation and acknowledge that change can be good. And if, you know, things don't work out as well as they should all the time, that's okay, because hobbling and undermining innovation in financial services is a bad path.
Yeah, absolutely. I know in Canada, in Ontario and BC and in various other provinces, I'll include Quebec and Alberta as well now. They have that little element of competition innovation being added. It's like 3 legs of the stool. It's not just investor protection and capital formation, spearheaded by, you know, agencies like the Competition Bureau, but they're very sensitive, and it's unseen yet the impact of having a few words or a new office be created. I'm not sure if that's another 10 years. We cannot afford another 10 years. We've got COVID, small businesses, consumers, we're struggling. And, you know, it doesn't matter what you call it, Build Back Better, whatever. We need to be regulated for the times. With that, I'm going to throw it back to you, Woodie, and I'm going to, the question is, you know, what sort of future do you want to see, and where do you see it going 3 to 5 years? And, you know, this is the future question for you.
Well, just to layer onto the bashing for a second.
The bashing, yeah, do the bashing first.
Said here from the data perspective. You know, these laws and these regulations that have been put in place have been to the detriment of women, minorities, the average American. They think they might be protecting people, but they're excluding them. And when you look at the opportunity that has come out of investment crowdfunding, the biggest beneficiaries have been women and minorities. I mean, pretty much 40% of all offerings, 2 out of every 5 are either a woman or a minority founder that's been successful with this. Where are you getting that money in Silicon Valley? I mean, they're trying, they're putting in a lot of face value into saying that they're deploying more capital, but they're not doing a very good job. And if community individuals want to fund people that look like them, let's embrace that and let's get behind it. The data shows that these people tend to be more diligent with the capital. They sure as heck deliver better results if you look at the annual reports than, you know, your average white guy, it seems. And so I think when you look at it from the opportunity that this presents, you know, and I think Andrew had a really good point. You know, this institutional side of things will really, you know, allow this industry to really exceed. And I mean, we're working on that right now. You know, we are taking the data, we partnered with a data science group to sort of look and see what the top 10% of the offerings that might go on to get VC funding, with the sole purpose of how do we engage institutional capital into diversifying and deploying down into these companies. I think that's the type of thing where the future is really, really opportunistic. You know, and I think the seeds have been planted, and I think we're going to get there. You know, we're in this sort of, you know, fast follower phase for a lot of what's happening. So, you know, it's exciting. There's my
fast follower. If the US is the fast follower, God knows what Canada is. Geez, I will. Peter Paul, what sort of future 3 to 5? What's on your mind?
Yeah, so we talked a lot about obviously the past and the regulators and all that, and I think all we can basically for me it's also sort of in a way water under the bridge now. Like we have the rules now to work with here in Canada. We want those limits to go up, and I would say to the regulators is that, you see, to what Alixe was saying, that the sad thing in a way is that it took unnecessarily long, and it's been driving up sort of the cost of raising capital for companies because of this fragmentation, as well as it created a confusion actually on both sides of the market for companies, but also for investors. Because if you're in BC, you're sort of as an investor also have different opportunities than when you're in Ontario for quite some time. So that's now behind us, so that's great. So I want to actually sort of really look forward in that respect and say it wasn't necessary. All I can hope for is that the regulators learn from that, and indeed, as we learn from these new harmonized crowdfunding rules, which will advance, like just has happened with RegCF, with including limits, I would say just stick your heads together and try to move really faster there, and it shouldn't and it mustn't take as much time as it did. And other than that, really it comes now down also to the market. I mean, on a really positive note, I mean, in America, in the US, we're now topping a billion US dollars. Here, if I at least speak for our platform, we've done now over 90 deals and over 100 million. So it's growing, and we see sort of, I would say, an inflection point, which is really exciting to see. Again, as I said at the beginning, we're at the end of the beginning, so it's really starting, but it looks really encouraging. And now it comes down to promoting it in a market. We talked about the huge educational side of it, but it's not even education, it's even about awareness. What we experience is that we talk with companies, we're not even talking about necessarily our own platform, but we actually start with, what is investment crowdfunding? How does this work? can I really raise from the public? Yes, you can. It's incredible that when I explain what we're doing, and I'm very clear saying this is for accredited, non-accredited, and there's a question from the audience after presentation, say, just to be clear, this is for accrediteds only, right? Like we're so set in that mindset, like this is for accrediteds only. No, it's not. This is for anyone. And if usually I say you can invest for as little as 250 Canadian dollars, and then the coin drops. Oh wow, those are not accredited investors. This is really accessible to the public. So it's really about building that market now, and I think that's where, at least where I feel there's been a lot of heavy lifting. Certainly, if here in Canada it's still, let's say, there are only a few platforms. Like in a way, a competition means even working harder, but it also means that you're sharing the work to build the market as well, right? So I think that's where we are, and moving forward. Again, I can only say regulators monitor this, move faster. I think you've also fair to say learn from the past. You don't want to repeat that, and really this is so exciting what we're doing here in terms of democratizing the market. Comments made about minorities that get way better access to raising capital. Female entrepreneurs have been traditionally struggling with that. We see indeed on our platform that we're sort of outperforming those traditional statistics, and we want to obviously take it further. But that's about accessibility and an inclusive market. And again, I said it earlier on. What certainly kept me going is to look at other geographies where it's ahead. And if you look at the UK, where about 40% of startups is now raising through equity crowdfunding platforms fully, or use it as an additional channel is really exciting to say. Final note is that I remember being on an angel conference. Maybe Alex, you was there as well. You may have been there as well years ago in Banff. Brian Kozak was there, and there was this first sub-session about equity crowdfunding. And I remember that angel investor, it was basically completely bashed, like equity crowdfunding. Yeah, I hear that there's this fraud case, and and nobody in the room. It was just outright dismissed. And so I think traditional investors have been sort of dismissing or saying, look, this is not going to go anywhere. What is exciting to see, it's changing. You see actually that the majority of the deals on platforms in the UK are co-invested or led by angels, VCs, and other institutional investors. Now that is really exciting, because that's where the different channels come together, and I think that's where it's going.
Stick with it, Peter Paul. Success is bound to come. If for more success, of course, 100 million, 90 deals is pretty impressive. The point around the support. I mean, people, organizations, sectors, they need to realize how collaborative crowdfunding could be. And this is net new capital. Generally, I know there was a big discussion at once about the cannibalization, but we need more support, and it's not just from regulators. And it's not necessarily a square peg in a round hole, if that's the expression. There's plenty of ways to connect, and plenty enabling opportunities with new technology in particular. But over to you, Kim, for your sort of future and comments around, maybe education and financial inclusion and those things that have been touched upon. I think they resonate. What do you see the future as?
So I'm going to keep my comments quite brief, but to the point. We live in a centralized economy right now, and I think the regulators are concerned about losing control of that. And at least from the seat that I'm sitting on, and depending on what side of the table I'm on, I see that decentralization of our capital markets is what's going to continue to accelerate. And I think it's only going to be through the decentralization of finance will we see the inequality gap potentially lessen, because today it's going to continue to widen. That gap will widen if we continue with the capital markets operating the way that they do. So I think that some folks have, seen the writing on the wall, whether it's using Bitcoin, whether it's using DeFi protocols. That's the future. And I think people who are not embracing that and educating themselves on that, unfortunately, I think they're gonna wake up one day and say, what happened? But that's the future. Digital wallets are the future. And what becomes centralized, meaning central bank digital currencies, and what does that look like? Will our fiat currencies have any value in them going forward at a certain point? That's a question mark, because there is a lot of value when we look at digital assets. And as we continue to educate ourselves on how to, to build in a utility for those assets, I think that's where we're going to see the biggest benefit for the next generation to come. So I'm gonna just end on that.
Those are strong words, strong vision, and the 99% versus the 1%. I love the frame of only helping through a decentralized finance solution. Technology is here, and I guess the world is trying to figure it out. It's exciting times to be part of it, and thank you for that. Mr. Dix, over to you. I know your gloves are off. This is more of an innovation question. Markets and models in the future, like the demand, where do you see, this is sort of like almost summing up your, the podcast. What's going on?
Yeah, well, I think that, I think for the US industry and the UK, as well as Canada, is that it really started focusing on crowdfunding portals or platforms where you went to a platform and you invested, you came away with some sort of security. I think with the when looking at blockchain technology, and you're looking at platforms like T0 or Securitize or other token sites, it's all kind of converging for primary and secondary offerings. It's good. You're not going to be going to different places to do different things. You're going to be going to one place to accomplish many things. And I think we've seen this happen in other sectors of fintech, where an online lender emerged as a digital bank. And I think for platforms today, so you look at a Republic, and Republic is offering multiple verticals. They're expanding geographically, but over time, they're going to be offering a greater number of services. And I think that's kind of the future going forward, because people don't want to go to Robinhood, to go to Chase, to go to, all these different digital services. The more you can streamline it and kind of simplify the process, the more value you're going to be creating for consumers and businesses. And yes, it's going to take a long time. It's like digital securities. I think everybody kind of embraces the fact that will be a future at some point in time. Well, now we're starting to see, some institutional players in that space, which is vital for sector growth. We kind of know where it's going. It's just going to take some time to get there. But as long as our policymakers don't get in the way and they have a knack for mucking things up, we can really accomplish some good things. Access to capital, providing access to smaller investors. I always believe that the smaller investors should have access to the very best investment opportunities. You don't give the VCs and the rich people access to the best deals. You give it to the smaller people first, where you can really democratize some of these services and drive benefits, drive value, minimize that wealth gap, which tends to expand all the time. And that happens largely because policymakers simply don't understand this. But the good thing is we have people like you all, pounding the drum, championing these messages, and pursuing goals that make sense for everybody, not just the 1%.
The small guys, yeah, it's really a pitch to join us, the digital finance advocates. There's a new group right there, right? Mr. Wunsche, Alan, I know I can see the crystal ball in your eyes. Last words. What do you want to? What do you love? What's going on?
I'll keep it brief too. And look, I agree with everything that was said. Kim, so grateful that you just called out decentralization and the challenges there. We need regulators. The regulation gives credibility. There's no question about it. And people get a great level of comfort participating in something that is regulated. Now, that doesn't have to be over-regulation either. And the fact that we have very, very powerful new technologies that in some cases are decentralized. There's a continuum of decentralization, but I'll keep it brief here. there is a need for all of our regulatory partners, if you will, in this marketplace, even though they're not partners, they're our regulators, to really understand the technology as quickly as they possibly can. Because, you know, if we're going to drive innovation forward, they really need to understand it as quickly as they can and not be afraid of it. We've unfortunately seen, and it's, I won't leave it on this note, but unfortunately, a lot of, you know, fear comes into play because of some high-profile incidents. Now, you know, we can move past those, and I'm really hopeful, based on what I'm seeing, that the regulators are ramping up their education level and that they are understanding it. But they need to allow for, you know, some flexible regulation to take place, or to call it, and I've requested this in terms of any exemptive relief that is provided, that it be flexible, that it doesn't, you know, block you in for a certain period of time, that it comes into play, you learn from it, you get to iterate. And so if we could get to some sort of, you know, panacea of a set of regulations that allow us to kind of go beyond a little, understand it, get the data, come back to them with data, which we can do now with these new technologies, I think it'll benefit everybody. So, you know, additional flexibility in terms of our regulations and speed and change.
A proper regulatory sandbox, a regulatory skill box.
Yes, thank you.
Alixe, you're on mute.
I've got to run.
You got to run. Well, okay. Thanks, Alan. Thanks.
Yeah. Thank you so much.
All the best with Tokenfunder. I know we're way past. Alixe?
Yes.
Yeah, your future question, or your question about what you'd like to see forthcoming from various stakeholders, and, you know, what a digital finance future in the context of securities-based crowdfunding will look like.
There's still, you know, in Canada and United States, an entire population of entrepreneurs and investors that the existing rules don't work for. They don't have access to capital. People like me, if I didn't have a university degree, would not have access to capital. Certainly, you know, I was talking to my cousin Paul. He's a dentist in Saskatchewan. Hi, Paul, if you're listening to this. But, you know, he told me that he was invested in a business of someone, a number of First Nations people had started a business that he invested in, and they got turned down by every single bank that they went to. They had raised $500,000 by themselves, but couldn't get any money from anybody. And then he asked me about the rules and what they could do. And he wanted to basically, you know, tap into other Indigenous people and other people from Saskatchewan. And I said, are they accredited investors? And he said, no. And I said, you need an offering member. Well, what's that? Well, you're going to need to audited financial statements. We're not going to spend money on that, blah, 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 blah. And I said, well, you can only tap accredited investors. I said, you're going to have to approach all your dental friends, all your other dentist friends. And so, you know, you don't have access to capital that's even across the board. And you may have certain pockets where we're awash in capital, but we're not awash in capital for people in Montana, Idaho, you know, other places that frankly regulators don't care about. And you know, you have state regulators that are concerned with fraud, and you have provincial regulators that are concerned about fraud. I think the person that you're talking about, Craig, or Peter, I should say, Peter from the BAF, is not going to say his name, but he's very, very popular accredited investor, very well known in Canada. And he used to call crowdfunding and say to me on a regular basis, why don't you just call it fraud funding? Because that's what it is. You're just going to open the doors to a bunch of fraud, and everyone's going to lose their money. Why don't you just tell them to tear it up, flush it down the toilet? Their money's going to go to just as good a use. And that type of attitude really has to change. You know, the small businesses need capital just as much as large businesses. Not everyone's going to be a unicorn. They're not the only businesses that should be funded. Businesses that are involved in ag tech, businesses that are involved in just plain agricultural endeavors, businesses that are involved in smaller type of enterprises, they all have to start somewhere. There's a couple of twins that I went to high school with in Saskatchewan. They started kind of a beauty company. That beauty company is very well known. They ended up being in the W Hotel in New York, and their products are in every single W Hotel. They started alone with their dad for $50,000. That's how their business started. Well, they were lucky to have a dad that could give them $50,000, because I think most people don't have that dad. And so we need to start thinking broader in terms of who gets access to capital. Like I said, I was really happy to see Jobs Act 2022. One of the proposals there is aimed at rural communities in particular. It kind of looks like our startup crowdfunding insofar as it allows people to raise up to $500,000. They're also talking about a venture, I guess, exchange sort of thing for smaller companies. There's some issues with that, but at least Congress is thinking about it and trying, and hopefully those conversations keep going on. But we need those conversations in Canada too, and you can't regulate fraud. You need to stamp down on it. Certainly, I read something today where there was 4 lawyers involved, and you're thinking, "Holy shit, they committed a massive fraud on the public." You need to really stamp down on that. Like slap in the face with a hammer, slap down. But you can't regulate to the point where no businesses go forward because the regulation bar is too high. So what do I see as the future? Decentralization is going to happen whether regulators want it or not. Much like cryptocurrency is happening whether they want it to or not. They're not going to be able to stamp it out. So I'm hoping that we're going to move forward, and that regulators are going to move forward too, because we do need that regulation. But it needs to be balanced. It can't kill the baby.
It's the reality. I guess the reality is, Cap. Thanks to everyone for their would-be closing remarks. I mean, we have to make capital markets whole, and to do that, it's technology is enabling this tremendous opportunity. So, for all of the right reasons, people need to support and join us on this educational journey, and it starts with regulators, but the industry, all the issuers, retail investors, and investment groups as well. So we're hopeful, and that's where we're ending this podcast. And I really want to thank, and I'm honored to be collaborating, providing education, connecting with all of the guests today for a decade, and it's eye-watering in that context. So wishing everyone continued success. Don't give up. The battle is real. It keeps us all moving forward. And 10 years since investment crowdfunding, since the Jobs Act was passed, we're hopeful for the next 5 to 10 years. We'd like to propose coming back in the next 3 to 5 years with the same group, and we'll benchmark where we're at. We all love data so much. So thanks for everybody for sharing the valuable time and knowledge and expertise with us. I think that's a wrap, everyone. Thank you so much. So really appreciate your time. And to anyone who's listening, if you're new to FinTech Fridays, please check out some of our incredible past episodes on the site. You'll be surprised with what you find. And we'll also be sure to post the contact information and links of all the speakers today. So thanks again, everybody. We will see you next Friday.
Thank you.
Thank you.
You've been listening to FinTech Fridays, brought to you by NCFA and partners. Tune in weekly for the latest FinTech Friday podcast by subscribing to this channel. The National Crowdfunding and Fintech Association of Canada is a nonprofit actively engaged with social and investment fintech sectors around the globe and provides education, research, industry stewardship, services, and networking opportunities to thousands of members and subscribers. For more information, please visit ncfacanada.org.